Thank you very much. Let's go immediately to the subjects. It is, of course, a very interesting economic topic. Time is changing so quickly. Nothing is the same as 2 or 3 years before. Marcin Mazurek, Chief Economist of mBank, will be switched to us and will be present to present the report for next year. May I welcome Marcin?
Good evening, everyone.
Good evening.
So I guess I shall proceed with the outlook for 2022. Okay.
Yes.
Okay, so I'm not going to display anything tonight because, well, the time is quite short, but I would like to concentrate on 3 topics. I would like to take something on major surprises in 2021, since this year is passing and it was surprising. Then I will focus on the outlook for 2022. And in the end, I will tell you something about the risks. So if something goes wrong, and I would present my preferred scenario, stress test scenario for 2022, which I think is the most likely one if it's going to happen. If it's going to happen, of course. So basically, as for 2021, this year is passing by. We are almost in the end. But economically, we had the data stretching from the first to the third quarter. So the fourth quarter is still missing, but we can still draw conclusions. So I think that 2021 ended with a high note. We are going to see 5.5% GDP growth. This is, I would say, astonishing numbers, since at the start of the year, the most optimistic forecasts were a little bit shy of 5%. What's more, at this particular year, we witnessed 2 lockdowns, 2 epidemic restrictions, 2 COVID-19 waves. We witnessed also broken value chains, and regardless of those, I would say, negative shocks, economy was able to generate such huge economic growth, and I think this is a huge success. But of course, this success came with a cost. It's not just some little cost, but kind of a big one. This cost is inflation. When I was drawing outlook for 2021 in late 2020, it was, I guess, in December, my forecast for inflation in the end of 2021 was 3.5%. And many people deemed these forecasts ridiculous, too low. Sorry, too high. It was too high. And now we are running inflation at 8%. And yet everyone is upgrading their forecast for inflation for 2022. But not let's not go too far right now. So as far as 2022, I think we are going to see much more of the same in that happened in 2021. So I think that we are not still done with the virus, so there will be some subsequent waves, and Omicron variant is I would say, variant of great concern at this very juncture, because we know a little how it works. But despite Omicron, and having in mind that economy grew more resilient towards epidemic risks, I think that the GDP growth in 2022 will be a bit lower than slower. GDP growth, GDP would be increasing by a slower rate than in 2021 at, I would say, 4.2%. It's not bad. It's still economic growth that it's being felt. So it's economic growth that carries more tightening in the labor market, falling unemployment rate. I would say that with such economic growth, most people and most enterprises stay happy or very happy. But of course, as I said before, again, in 2022, we would have some more costs, and this cost will be, again, inflation. And on average, I think that inflation in 2022 may be even higher than it was in 2021. In 2021, it was on average 5%. In 2022, I think it will be closer to 6.3. So these are huge inflation numbers because we got used to much smaller ones. But yet, not the whole inflation, not the whole inflation story is stemming from the strength of the economy. Some of inflation, I would say, at least half of it is stemming from some, I would say, unexpected shocks that rolled through the markets in 2021. I mean here the shock in oil prices, the shock in energy prices, shock in food prices, and also broken value chains and so on. These shocks are going to be slowly dissipating in 2022, but yet inflation is going to stay high in 2022. But the perspectives for 2023, I think, are much, much better, and inflation is going to settle down at much lower rate. I would say we'll be very close to central bank's target. That is, in Poland, it would be close to 2.5%. But let's see how it develops, and let's see what we will say when we meet one another next time next year. What is going to happen in 2022 apart from GDP growth and inflation? So I think that labor market is going to be tightening. So we would see kind of wage pressure because wages are going to be growing at kind of fast clip. I would say 7-8% on annual basis could be made a baseline scenario. We would see also falling unemployment rate. It would fall towards something around 5% in the end of 2022. As far as exchange rate is concerned, this is kind of a problematic part. I think that most of the weakness right now is stemming from the fact that Poland right now is kind of quarreling with the EU over the development funds in 2000 that are set to be distributed from 2022 onwards. And there is huge uncertainty regarding the disbursement of those funds, as you probably know. So this is the main factor that is driving PLN right now to the weaker side, in my opinion. So as soon as those factors dissipate, I think that there is room for zloty strengthening in 2022. It's not a huge room, but when we are right now at 365 in Euro PLN, I think there is a huge chance that we will see something around 430, 440 in the end of 2022. So nothing big and nothing surprising, but some appreciation should be felt. As far as interest rates are concerned, right now, Monetary Policy Committee, NBP, is in, I would say, monetary policy tightening cycle, although they are failing to admit it. But I think they are closer to the end right now. Right now, the rates are at 1.75%. I think that they are going to end at 2.5%, and it's going to be quite fast. It's going to be achieved quite fast because I think it would be achieved until March. So afterwards, the rates will stay more or less flat. And I think that this juncture of those features of the economy that I described some minutes ago would allow for economy to soft land in 2023. What does it mean? It's kind of economic jargon right now, soft landing, hard landing. But soft landing would be, I would say, rebalancing the economy with still somewhat high economic growth that is above the trend, with lower inflation and without any unnecessary economic toll. And I think it will happen. So in 2023, we would have much more balanced economy. But of course, something can go wrong. And I would say that my preferred stress test scenario for Poland is the following one. So we may have problems with consumers in 2022 because as inflation is running high, real disposable income is also not rising fast. So consumers may back off more than we think. Right now they seem resilient, but who knows, this can change, and we are sketching stress test scenarios. So why not say that consumers are going to stop accelerating their consumption, for example? That can happen. Of course, we may see consequent waves of COVID-19, and we may see also economic restrictions. And in such environment, it is quite possible, it's very possible that inflation will not be lower, but it will be higher. Because right now, COVID restrictions, epidemic restrictions are, first of all, driving supply of the labor of the market. That's one thing. And the other thing, they are accelerating broken value chains. So the economic epidemic restrictions make things worse in case of inflation. So when consumer retrench and we will have high inflation, it is quite possible that we will see a scenario that entails quite low economic growth and quite high inflation. Of course, it can be deemed stagflation, and it's a problematic equilibrium for monetary policy, and it's also problematic equilibrium for politicians, because when you are in stagflation, I would say that at current environment, it would entail much weaker zloty, not stronger, weaker. And this is also problematic for monetary authorities, since weaker zloty would drive inflation even higher. So in such circumstances, some investors may play for even weaker zloty, claiming that NBP is not going to deliver necessary rate hikes in such circumstances. So we may see some nasty spiral coming out. So this is a stress test scenario, but I think it's the likelihood of happening of this stress test scenario is, I would say, 5-10%. It's not much. But I'm having this scenario in mind when I'm sketching the numbers for 2022. And of course, there is also an issue of EU funds that are being, I would say, subject to question right now, whether Poland is going to receive those funds or not. I think, and my baseline scenario is that Poland is going to receive those funds. And what happens if it does not receive those funds? So no, let's not open this door and leave it for some other occasion. Thank you very much.
Thank you. Actually, if I may, I have the first question to your presentation and to the report. So when I really understood you, you are very optimistic. Is it right? For the next year. It means that you don't think that pandemia will go on like this in different variations and will not send such shock waves like in the past?
Yes, I assume that economic restrictions would be in the negative effects very close to the ones that we witnessed in 2021, or even lesser. So I don't think it will be a big deal. And if you say that I'm optimistic, I would reply that this is not the most optimistic forecast that is on the market. I've seen higher GDP growth rates, lower inflation, and so on.
So we learn to live with the pandemia.
Yes.
Shortly. Are there questions from you in the meantime regarding the report? There are for sure some questions, maybe also on the chat. Digital and not. Yes. Mr. Ambassador.
Even appreciating next year. Should I repeat that?
Yes, because I didn't hear the question.
Microphone, yes. I would be really interested to hear a little bit more about your reasoning why the zloty could actually increase its value again next year.
Okay, so let me elaborate more on this. I think that when you look at exchange rates, you can look at, I would say, three dimensions. Whether there is economic growth or not, and you can tick here that there is economic growth, and economic growth is not going to be much lesser than in 2021. So we should take this thing for granted. Second angle, whether interest rates are high enough or not. You can look at real interest rates, and you can arrive at conclusions that well, with negative interest rates you will never see zloty appreciating. But let's take another angle. Look at where the rate differential is between Poland and the Eurozone. So it's much higher than it was before pandemic. So I think that as far as interest rate differentials are concerned, there are circumstances, there are good conditions for zloty to appreciate in 2022. And third dimension, overall risks are uncertainty, and this is all connected with EU funds. So I think that investors right now are quite anxious or cautious whether these funds will actually flow. And I am seeing it via variation of exchange rate on day-to-day basis. So every time there is some positive news flow regarding the inflow of EU funds, zloty appreciates. So it drives into the conclusion that this issue of EU funds is the most predominant one, keeping zloty on a weaker side right now. So as soon as it goes away, I think there is room for zloty to appreciate.
Mm-hmm. So you mean as well that the funds will fully next year be in function from
Yes.
the European Union?
Yes, this is what I mean.
Yeah. Yeah. Further questions, especially from the companies? I think positively formulated, the pandemic had the positive effect that bureaucracy was going down. And there came even a boost regarding innovations and digitalization. This means, doesn't it have a stronger impact on the economy?
Okay, this is a very interesting question, because yes, indeed, the epidemic restrictions and the times we are living in the recent 2 years, I think, released a huge bout of innovation in many dimensions. What I'm waiting for right now is for more labor-saving investment to kick in, and I think this is the, I would say, the most natural way for Poland to escape demography problems. And I think it's going to happen in the next years. So we would have, I would say, two dimensions of economic innovation. We will have continuation of digitalization that we witnessed in 2020 and 2021. And the next, I would say, venue would be cost labor saving investment.
Mm-hmm. How is it with Silk Road and the transport? Does it has impact as well, a positive impact on Poland?
In perspective, definitely yes, but I think that the progress here is not as advanced to make it an important factor for 2022.
Mm-hmm. Okay. More questions? Yes.
I have to come back to investments and link it to, let me say, the necessity of sustainability. So what do you think will be the next years? What will Poland as a country do to be as sustainable as possible? So thinking about electricity and so on and so far, and also maybe using the EU funds. So what's your opinion on that?
Well, those issues that you're asking for, these are not the ones that could be, I would say, answered in 1 year. I think that there is a plan in Poland to slowly come down from electricity generation from coal and so on. And I would say it is written right now, and it's going to be financed mainly via the funds from European Development Fund. And well, it's going to happen, but I don't think it's an issue for 2022. It's rather an issue for the next 10 years, 15 years. And I am optimist here, and I think that Poland is going to actually use those funds to improve sustainability and energy generation.
Mm-hmm. Yeah. Some further questions regarding this? I mean, I have also to mention from our point of view, Austrian companies and export-import. We were just looking to our trade balance, and it was exploding. It was exploding insofar that we had growth of 32% by exports Poland to Austria, and exports Austria to Poland were also about over 20%. What is your reasoning regarding this effect?
Yes, the trade relations are very interesting here, because I think that we should distinguish two features or two trends here. So the one trend was just before pandemia, the global trade was coming out from being in the reverse. So global trade flows were improving. So Poland and other European countries were enjoying this improved trade flows. That was one thing. And the second thing is, during pandemia, trade even intensified. And it was mostly connected to the fact that people backed off from services consumption and switched to consumption of goods, and also globally investment cycle kicked in. So there were many things to trade in the international markets, and it helped a lot. I think that right now we are in a, I would say, falling phase of this boom generated during the pandemia, and the trade flows are kind of temporarily diminishing. And I think that those broken value chains are having the toll here. But in the end, I believe that the trade flows are going to resume, and we will see here an upward trend.
Mm-hmm. Mm-hmm. Actually, another subject what is very strong is the reshoring or nearshoring effect. Do you think Poland will profit of this trend?
Yes, I think it will, but I think we demand some more sustainability in energy generation to fully reap profits out of this reshoring process, because Poland still enjoys a huge interest among international investors. Many firms would like to build their premises here, their factories here, but given the current forecasts, there may be problem with energy generation. So this may be spooking investors. But I think that the reshoring trend is kind of important for Poland in other dimension, because as you probably know, the demography is not working in our favor right now. Labor market is quite tight, wages are accelerating, but luckily recently, Poles have been coming back from immigration, so they are coming into the domestic labor supply, and I think this is kind of reshoring that we are benefiting right now the most.
Thank you very much.
We have one question. Okay,
Yeah.
I will give you the micro.
In the chat, yeah.
Very shortly, so this re-emigration of labor to Poland, is this also skilled labor, and can you evaluate this economically, how it makes an impact first, and secondly, how I mean, I see that you are optimistic also about the European Union and the disbursement of the Recovery and Resilience Fund, which I think is quite a lot of money. Like, if I remember rightly, 70 billion euros for the next 7 years. How would it affect the growth if this money is not going to come? Let's say if we assume a less optimistic scenario.
Okay, I hear you. So let's take first the part regarding immigration. So we are at the very start of this process, so we don't know much about those people, and the numbers are not really impressive right now. But it's worth to note that the trend of emigration was kind of broken down. So we are optimistic here. I think that when we meet in a year time, I may be able to say something more about this. These are not the big numbers, but we are mostly tracking trends, and we see that this trend for net emigration has broken down. So that's positive development. And as far as those EU funds are concerned, yes, this is a lot of money. 70 billion is only a part of it. I guess the total amount is twice as high. But when we look right now at the problems with this money, I don't feel it that they are concerning only this part. So I think that if this crisis or conflict escalates more, we are having at stake the all structural funds also, so the part of usual budget disbursement from the EU. So in this vein, I think it's well, in total, it's very important to Poland investment cycle. I would say that in the best times when those funds were flowing at maximum output, Polish GDP growth was higher by around 2 percentage points owing to those funds alone. So barring Poland, those funds would be problematic. It would be very problematic in the short term because it entails completely different economic scenario with, I would say, huge depreciation of the zloty because economy would be needing some weaker exchange rate to balance out. And in the long term, of course, it may entail some weaker trend growth. But still, I think that the effects are so huge that both parties would be interested in making a deal in the end.
And we have still one question from the chat here. Yes, I will read it for you. What is the reason for the positive assumption for GDP next year? Do you take into consideration the effect of the Polish deal?
Yes, I didn't broke down the GDP numbers for 2022, so I'm doing it right now. So basically, we think that, first of all, the private investment cycle is going to be continued. The reasons for this were mentioned today, not once. What's more, we are going to see a jump start in construction cycle that is mostly EU money sponsored. To jumpstart it, we do not need a new fund. It's just an organizational thing that will keep the even old funds being disbursed. So this is a, I would say, low-hanging fruit for us. Secondly, I think that the performance of exports would be still very impressive. It can be seen in manufacturing output numbers. Despite all those broken value chains, despite of huge cost increases, despite problems with labor, manufacturing is powering up and it's rising at faster than recent trends. So something has clicked here and it's working more than fine. And last but not least, Polish consumer. I think that consumption growth will slow down from, I would say, 5.5%, 6% in 2021 to something like 4% in 2022. But consumers are not going to enter recession. I said that it may be a stress test scenario, but barring those stress test exercises, I think that consumers have a huge cash buffers right now still at hand. In 2020, cash in circulation went up by 70 billion. It was improving the coin base by 25% in 1 year. It was a huge jump in cash in circulation. And I think this is the effect of more lax fiscal policy in 2020. And those funds are, I would say, alternative form of savings. So they are left for some rainy day by consumers. And I think if they feel very overburdened by the prices and so on, they will spend it simply. So I think there is a huge caution on consumer side. So I think that's this will be the breakdown for 2022 for GDP growth, 4.2% overall.
Thank you very much. As far as time is running out and we have no more questions, I would like to come to the second point of
Thank you.